Hi guys, welcome to Akil's Invest channel. In our last videos, we have seen how mutual fund works and what is mutual fund, right? So in that video, we have said that there are a lot of types of mutual funds. Today, let us discuss about what are the types of mutual funds. Before that, if you go to the internet and if you search for a mutual fund, you will find a lot of different types of mutual funds. Like there are types: healthcare fund, equity fund, emerging fund, large cap, mid cap. You will find a lot of different names with a different asset management company. With ICICI, it might be HDFC, it might be SBI, whatever might be, any different funds. But all the different funds, everything will be fall in a five types of category in a mutual funds. Okay, what are these five types? First, equity fund. Next one is debt fund, and another fund is high yield fund, and the next one is solution oriented fund, and another one is the other funds. So the name itself other fund. So what is the equity fund? So in the equity fund, they will invest into the only the equities. Like what is equity? It is only the companies like Tata Motors, Hindustan Unilever, Indian Oil Corporation Limited, whatever it is. So particular stocks for a company, they will invest in the company. So apart from this, they will not invest any money to any other thing. Like investing in a stock is different, and investing in a bond is different. Okay, any company will come to you to get a money in a two way. One is they sell their share to you and they get a money, right? So that is the way they will come through the IPO, which we have discussed in our previous videos. But otherwise, what is the other way they will come? They will come up with a bond. Okay, they'll return a bond. Okay, I need a money from you. I'll give you a 6% interest, right? It is like we are borrowing money from someone for interest. So the same way. So this is another way of collecting money. So in equity fund, the first type of fund, they will not invest these kind of bonds and all. Okay, they will invest directly on the company stocks. Okay, only on equity. So this is called equity fund. So equity means only on the shares of the company. Okay, the next fund is a debt funds. Here they will invest in the debts. Like if the company is borrowing money through the bond, through issuing the bonds. Like most of the government organization, they used to issue the bonds. For if the government needs some money, they'll issue the bonds and they'll get the money from the public and with a lower percentage of interest instead of going to the bank. If they go to the bank, and they need to pay more interest, right? So better than that, they will give less interest to the public, like 7 or 8% in a 1 year term or 3 year term. In that bonds also they used to invest. That is a debt investments. So what is the difference between the equity investment and debt investment? What is the difference between the equity fund and debt fund? The risk ratio. Equity is when investing in a stock, right? So there is no agreement that the price of the stock will go up or down. It depends. If the company goes on bankruptcy, you will not get anything. The share price goes down. Then it is a risk in equity. Investing on equity is a risk, but there is a high return percentage, like 23-24% or 10 to 15% will be the return. But whereas if debt funds, there is a return percentage will be less because there is a fixed return. You are investing in the bonds. It is an agreement that I will give you 7% interest for you, right? So in those kind of bonds, when they invest, it is safer hand side. So debt funds, there is a risk ratio is less. Another fund is a hybrid fund. This is not, I will invest only equity, I will invest on debt. You can combine both of them. That is a hybrid. So there will be some amount of investment in the equity, some amount in the debt fund. There is a percentage of investment they will have. This is a hybrid fund. And another one is a solution-oriented fund. So solution-oriented fund, it is more or less investing in a stock market, shares, bonds, and everything. But there will be child fund or something. The term will be longer, like 20 years, 25 years. you have to stick with the term. Okay, like FDs. So in that case, what they can you can assure them that I'll keep the money for a long term. So they can invest the money in a risky areas, and they can promise you some good returns. Comparatively to the debt funds, solution oriented fund, they can get you the better returns. But there will be norms and terms and conditions that if you do the yearly closure, there will be some additional charges and all, right? So another fund is the other funds. So the other fund is index fund, investing on the Sensex and Nifty. This is another fund. Okay, so these are the five major categories you could have find in the in the mutual funds. Whatever the fund name will be, if the fund name is emerging, large cap, mid cap, everything will be under the five category. Okay, so let us see. Most of us could have heard this. I told the other funds there is an index fund. So the Nifty, Sensex, these words we might have heard on a lot of news channels and everything. The Nifty points crashed, the Sensex points crashed, right? So what is Nifty and what is Sensex? In Nifty, they will have a 50 stocks, selected stocks, to monitor the whole stock market, how the whole stock market performance is, to analyze that they will have the each industry, some best companies from the each industries. It will be on the Nifty 50. And the same way, Nifty 30, it was a 30 companies from the industry. So if the 30 companies drop down, the share market, the share price in a day, it means the total market is negative. That is for the assumption only it had created. So if you ask me, can I buy a Nifty? Can I buy a Nifty? Can I buy a Sensex? Yes, you can buy. If you want to buy a Nifty, you can buy. It means it is a way of investment. Like instead of buying in one share in a Tata Motors, one share in one another company, Hindustan Unilever, and whatever it is, LIC and whatever it is. You are buying a Nifty means all the 50 companies you are having some part of investment. Like a Nifty is 15,000 points. It is 15,000. You need to pay 15,000 to get one Nifty share, right? So when the Nifty goes up, when you sell it, if it is 16,000, you will get a 16,000. So Nifty, if you are investing, means it is nothing but you are investing in a large cap companies. Okay. And if you are Sensex, you are investing in 30, again, it is a large cap companies. Why I'm saying using this word of large cap companies? Let me explain you what are these large cap companies. Mid cap, large cap, small cap. The term I will explain you. So the companies, they split into three categories. One is the large cap, mid cap, and the small cap. So large cap, the name itself, it is a large cap means it is a big companies. Okay. The grown-up companies, in which the companies, it is like a big companies. They have a long history, long run in the industry. Their market capital is higher, right? They have a big market capital. So what is this market capital? Like if the company's market capital is 20,000 crore and above, that will be a large cap company. If it is a 5,000 to 20,000 crore, that is a mid cap company. If it is less than a 5,000 crore, that is a small cap company. Okay. So how they get this 20,000 crore and what is it 5,000 to 20,000 crore? How they can get this market cap value? This is nothing but a number of shares in the company into the current market price. Which company current market price is higher and the number of shares is higher, that will fall into large cap company. It means if the company's number of shares is high and the demands of the share is also high, it means the market price is high, right? The trade price is high. So when you multiply that, you will get more than 20,000 crore, then it is a large cap company. In large cap company, mid cap company, small cap company, what is the difference between investing in these companies? Because when you are going for investment in future, you will find in mutual funds itself, there are a lot of mutual funds named with large cap, mid cap, multi cap, small cap. So this is very important to know these three companies. You don't need to know about much of these companies, like how many crores and all. You don't need to remind all these things. You just need to remind only one thing, that large cap is less risk companies, mid cap is moderate risk, and small cap is high risk. Because the small cap is very small company, now only they are, they are getting their now only they are growing company. So there might be a risk in the market for them. There might be a competitor, or they might failure. They could have not managed, the management could not handle the growth. Anything could have happened with a small cap company. But mid cap company, they might have handled it, these puzzles. So they're well established, but still long way to go. Right? Large cap company, they have set a platform, they are a monopoly, they have a good growth ahead, and they just need to run the business as it is, as well as if they have some R&Ds and research and development sections to introduce more things, more to increase the sales and everything. So if they increase the growth of the company, that would be enough. So in that case, how to invest this large cap, mid cap, small cap? If you have 100% allocated money, apart from the 100%, in the sense 100% mutual fund. So you have allocated some money for 100% of mutual fund. Say for example, if you are earning a 1 lakh, okay, apart from expense, you have a 50,000. In that 50,000, you have allocated some percentage for real estate and gold and everything, and rest you have 20,000. Okay, so 20,000 you are planning to invest in a mutual fund. In that case, you have to put a 10,000, the 50% of amount in the large cap, and another 5,000, 5,000 to 8,000, whatever it is, you have to put in a mid cap, 30% of amount. Another 20% of amount you have to put in a small cap company. So you could see a multi-cap mutual fund also. If you see that multi-cap mutual fund, mostly they might have split their investment in the same way. The large cap will be 70% or 50%, and mid cap will be some 30%, and small cap will be 20%. So the same way, when you are investing in a mutual fund, you have to split your money. Depends on your risk. So when you are investing in a mutual fund of small cap, there will be a possibility of return up to 25%. If you're investing in moderate, like a mid cap, if you're investing your money in a mid cap companies, mid cap mutual funds, if you're investing your money in a mid cap mutual funds, okay, you can earn a money up to 15 to 18%. So if you're investing in a large cap mutual funds, you can earn to 10 to 15% of returns. So guys, in our next video, we'll analyze a mutual fund, and we'll learn about how to, we'll take one particular mutual fund and we'll see how to invest that mutual fund, and what are the parameters are there in a mutual fund, and what is lump sum investment, and what is SIP investment, and which is suitable for whom. Everything we'll see in our next video. Thank you. Share my channel, subscribe the video. If you have any comments, put in the comment section. Thank you.